Hey everyone, this is 7FX right here. Today I'm going to be teaching you guys the basics of buy side and sell side rates, or in other words, buy side and sell side liquidity. And this are more in retail would identify this as it's not like an official form, I would say, but we would identify this zones as support and resistant areas in which price tends to react or target. But when we're talking in smart money forms, it's just key reversal zones that price is still yet to visit. In other words, let me just sketch out something before we go into real price. It's pretty simple. When price is bullish or bearish, it tends to create key reversal zones, right? For example, like this. This would call this as a resistance and the low as a form of support, right? So in smart money, we identify these key zones as buy side and sell side liquidity. And this is basically how price tends to move. It's basically targeting these two zones, but the most fundamental part about it, price should not we do not consider price once it revisits the zone as a buy side and sell side liquidity. In other words, this buy side and sell side are only considered once price revisits the zone and reacts off it. In other words, would expect price to reach this level or this buy side and then potentially target the sell side liquidity going down, and then from below here would target the buy side, the new buy side liquidity going up, which wouldn't be this buy side, it would be the potential buy side that is formed above the most recent. We do not consider the third recent buy side or the fourth or even the second. We only consider the most recent. For example, it moves from buy side to sell side, from buy side to sell side, from sell side to buy side, from buy side to sell side, vice versa. That's basically how price tends to move in ranges. So like now, let me just show you and help you identify this in like real market conditions. So currently we are on the 1 hour time frame and price is fractal. In other words, whatever happens on the larger time frame also happens on the smaller time frame. So you can identify these zones within the daily, the 4 hour, the 15 minutes to even the 1 minute, but we'll get more in depth at a later stage. So how do we identify these zones? The easiest way and the best way I personally learned to identify these key zones is through what's this word? Through hindsight. Basically, not back testing as bar replay. Hindsight, as in you just go to your charts and identify these key zones that have already happened. For example, this right here would be considered as sell side. Let me just sketch that out. As you can see, this right here would be considered a sell side liquidity, and once it's wiped right here, it is no longer regarded, and this new zone becomes our new sell side zone. Let me just sketch out a bit more for you to basically understand what this forms or this liquidity rates are. Then we'll be moving on to the next chart where you will have to identify the zones yourself by pausing, I would say. But yeah, right here we got buy side, which has been violated right here. So yet it's no longer considered, I would say, buy side. If price, so like right now on current price is yet to push bearish or move down into a sell trend, it would most likely be targeting the most recent sell side liquidity areas that price hasn't visited yet, which being the first one, this one's been violated. So we would be considering this one as the most recent sell side right here. This right here a sell side that has not been visited. Sell side. And this right here a sell side that has not yet been visited. So price basically targets these zones to rebalance, because in simple words, that's basically all price does. It goes from one buy side to sell side, from sell side to buy side, vice versa, you know. So right now we're gonna move into another time frame or another pair, and then you'll be identifying the zones on your own. So right now we are on Euro USD on the 1 hour time frame, and I would recommend you pausing the screen to identify or note out areas in which price reacted through the buy side that is basically easier for you to identify. So you can like pause the screen right now. So here are the few liquidity rate areas or zones that I was able to identify. And if you're not in scale or not in key with the ones I was able to identify, you might have seen various ones, because there's various ones to be identified in which price reacted on. So as you can see from here, price created this high, pushed bearish, pushed back up, violated the high, and then dropped. And then once it dropped, it was targeting a sell side liquidity in this zone, violated it, and then pushed bullish. And then from here, once it violated this buy side liquidity, it pushed bearish. You understand? Here, violated the sell, pushed bullish. And like the major keys in which we use to identify whether price is gonna reverse, there's a few more fundamental things that happen on like the lower time frame in which we use to identify where price is going, or if price is gonna potentially provide us with a reversal or continuation. So in other words, price created specific just fix this a bit. Price created, I don't want to call it patterns, but price formed specific patterns within these zones right here to indicate the potential reversal that we utilize to identify high probability reversal trades, with a few additions of like correlating pairs, but all that will be taught at a later stage of the course. So right now we're going to be identifying key areas or zones in which price has not yet visited, because as you can see, all this buy side and sell side liquidity has been violated. So I'm just going to clean the screen, and then you're going to pause and then identify key buy side or sell side zones in which price is still yet to violate or has not violated yet. Let's go. Okay, here are the key zones or sell side zones and buy side liquidity areas in which price is still yet to visit. In other words, price pushed bearish from right here, right? So our highest target or potential key zones in which we may anticipate price reversing are the most recent lows that price is still yet to visit. So basically all the zones right here have to be taken into consideration, and then within these key areas, price may provide us with potential reversal, patterns or indications that price is continuing bearish, but we also utilize higher time frame confluences to be in sync with the whole overall direction. So with today's lesson being said, I would strongly suggest or advise you to go back into your charts on TradingView and choose the selected pair of your choice and just identify key areas, reversal zones that price violated, and then pushed away, targeted the new zone. In other words, identify the buy side and the sell side, and then from the sell side, look for the buy side, vice versa. For you will require a few back testing, I'd say, to get used to the format. As easy as it may sound, it also still requires some form of work or labor on your side to get used to identifying these key zones unconsciously. You understand? With that being said, everybody, have a great day, have a safe night, and be safe.